How are you all? I hope you all are doing good and you are having a great time. Yesterday we had a good party. So what is TechFin? If I ask you all, what do you know about TechFin? Can anybody tell me what is TechFin? Or does anyone knows about it? No, it's good. Okay, TechFin is the origin, like we know about banks, we know about fintechs. Now there's another thing that is coming up, which is TechFin. Actually, it depends on the origin of an industry, that what is the origin of the industry. Like we know banks, we know how fintech players are doing the things, but now there is another challenge which has been coming to the banks and the fintech players, these in the shapes of TechFin. So we'll talk about TechFin, that how TechFin is reshaping the finance world, and we'll talk you through that, like what are the development stages of TechFin company and what is the value addition that they are doing it, okay? Okay, just a brief about me. I'm associated with Huawei. I work with blockchain, I work with 5Gs, and I'm also now working with banking companies to actually establish their platform and how they can make good business, So I'm having a diversified experience for that. Okay, so for the content, first we'll talk about the basics, like what are the basics or what is the origin, like who invented this term TechFin, and what is the value addition over the traditional bank and over the traditional fintech players. And then we'll talk about the development stages and what America is doing, what China is doing, what are the different players that are contributing it, and what are the challenges that we are facing in today's world. Okay, just to start off, TechFin is a company which is a technology-based company, but which is providing now, which is going into the financial services, okay? Actually, Jack Ma, we all know this guy, right? He introduced this term TechFin, like he don't want to call himself a fintech player or a fintech company. His company, which is Alibaba, which is an e-commerce platform, he started like from that platform. So he coined this term TechFin. TechFin is like, once you are starting a technology company which has its own infrastructure, so you can be able to provide the financial services also. Okay, so that is what the basics are of TechFin. And examples that we are having is Google, Amazon, Apple, Facebook, and in the China we can see Ant Financial, we can see Tencent, we can see Baidu. So all of these companies are originally from the tech industry. They have their own infrastructure, they have the technical resources, but since they know that now the business is disrupting and the banks and fintech players are fighting with each other just to have the market value. So they see an opportunity that if I'm having already a technical setup in which I can scale better, I can provide better efficiency, better cost with my existing infrastructure, why I should not try this, okay? So this is how they are doing the things. Okay, so drawing a line between fintech and TechFins, we know like Stripe, online, or PayPal, it's like online banking platform, or their online payment platform, they're providing services. But the thing is that Stripe, you all know that what Stripe is. Stripe is an open banking API in which they are having a good merchant setup. Any merchant can come and set up online things. But if you talk about what the technology firms are doing, technology companies are having, like, I'll talk about Ant Financial. What Ant Financial is doing is that Ant Financial, he is providing many services, like we have Alipay. We know Alipay. Like Alipay and WeChat in China itself is capturing most of the market. And 55% of the population of China is using an online app. And how they are so much relying on that, because they already were using Alibaba platform. So Alibaba thought of introducing Alipay. So Alipay is now providing financial services and capturing most of the market. And now they are only providing the financial services, only the payment. They are also having some features like Ant Fortune, in which if you're not spending your value, or if you're not spending your wallet, you can still leverage that amount if you're having a petty cash in your wallet. So this platform allow you to make the money out of it. Okay, and then they are also providing the insurance services. With insurance, normally we see that there is annual insurance policy. But what they are doing is that they are providing loan on a day basis. Like if you want to have a loan, or if you want to have something for like a short duration, you can have this facility. Okay, and also they are providing lending service. So as you can see that they are with the TechFin company. Since they are established, they have a good infrastructure. They can scale their products into a massive way, and which the normal bank will have challenge to do this, because they have to face a lot of regulations. We'll talk about the regulation in the next slides, but they have to face a lot of challenges. What fintech is good at is fintech is doing the same thing with better technology, like they're using the same concept, like providing financial services with cheaper an efficient way by the use of technology. However, what TechFin is doing, TechFin have a broad range of services. So they are not only providing good, efficient services, but they are also having a services which are beyond their normal scrap, or beyond which anyone can come. Okay? So we'll talk about the benefits. The benefits is that barrier that they're already having a good database of subscribers, like if you're having an e-commerce platform, or if you're having a technology company in which you're already having a lot of subscribers. So they already know that what the users are doing. So they don't have to capture the market. Whereas in the fintech, if you having the technology, but if you don't having a customer database, how you will grasp the customers to you? So you have to have your collaboration with a bank. Okay, but with TechFin, they're already having the customer database, so they know that what the customers are doing and how they can scale better. And then the understanding user behavior is easy. Like if you're having a massive user database, you can know that what your each users are doing. Okay, so you know the behavior of the user, so you can play on that behavior and provide the financial services in a better way. However, with respect to fintech, you have to rely on some third party to provide you the user data, and then you have to build the service accordingly. And then there are less regulations and more consumers, because once we talk about regulation, I mean the regulation also needs to understand the technology, like what the companies are doing. But with respect to the TechFin companies, like what Amazon or what Facebook is doing, is that they don't actually, the regulators are not understanding what they're actually doing, and they're playing the things under between or below the ground. So once they're understanding, once they reach to that level, then they can, put some regulation or put some compliance. So they have a somewhat more leverage for that. Okay, so as you know that what this is doing is that once it's all started in China. So what they have done is that with this platforms, with like Alibaba or Ant Financial, what they have done is that they have captured, like in the China, if you go to the streets, you can see a beggar with a barcode written on his forehead, and you can, send him the cash. So, every people, they don't carry any cash. Okay, and how they have gone to this level? With a conference, like they are already engaged with the TechFin companies in their usage, so they are relying on their, or if a TechFin company is providing the service, so they're relying on this platform to, avail that service. And it's capturing most of the market. Okay, so what is the development of TechFin like? How, if we talk about like how they are doing this stuff. Okay, the first stage is that they are actually asking, or they are putting their platform as a marketplace, like they are allowing, the merchants to come into their platform, and they will provide them data, or they sell the data to them. So this is the first stage, that how they are doing the things. And once they are having enough merchants, they know that what are the insights of the user, or how I can scale up. Then in the second stage, they thought of, okay, now we have to develop our own platform. So in the second stage, they are developing like Amazon or the Alipay. So they have developed all of these things in the second stage, once they have analyzed, or once they have the complete insights about the data. And then the third stage, it is a horizontal diversification, that how much I can scale further. If I'm using an existing database, or if I want to scale further, because I already know that what my users are doing, what platforms I should need, so I can have different verticals in my platform. Okay, so allow third party to sell financial services on their own platform. Regulation in the second stage comes with IBM, Alipay. Like for the regulations, they have the challenge to actually catch them in the stage one. So once they develop their own product like Alipay or something in the second stage, then the regulation know, okay, these companies are doing something, or now they are having the right, so we have to catch them up. So this is how things are going. Okay, then market segment for the TechFin market segment is mainly P2P lending system, or the customer payments, or they are having merchant lending. So they are mostly focused on the three domains like most. So once they are having or prospects results for this all platforms, then they want to scale, or they want to go into some different market segments. So what is the value addition? Customized services, 3,000 loans a year, ranging from $5 to $5,000. Like you can even get a loan as low as $5 and as humongous as like $10,000 or $20,000. It depends on your credit scoring. And what they have done, that with this technology platform, with this infrastructure, they're delivering massive services with more efficiency. Like they have done, just imagine that they have processed like $10 billion in 5 minutes. Imagine any fintech player can doing this, or any bank can do this thing. They cannot reach to that level. So with this brilliant infrastructure that they have developed over the past years, with the technical resources that they are having, they are leveraging this opportunity to actually overlook or to make sure that they were doing a good business with respect to bank and the fintech players. Okay. So what Java is doing? What is Java? Java is Google, Amazon, Facebook, and Apple. So now, once we are talking about China, we're talking about Ant Financial, Alipay, all of these things. But the US is also catching up. Like we can see that Amazon and Facebook are also going into the payment services. They have and having insurance and wealth service. So now, I mean, as per the trend, all the technologies companies are using or are going into the financial services because here where the money lies, you know. So this is how they are launching some different products, and they're having a good size of the market as well. So Facebook is enabling e-commerce massively. Like they are having WhatsApp, Instagram, and they're also with different of these social platforms. They are providing different financial services through apps or through integrating some marketplace banking. So what I can see is that now once we talk about Facebook, we only talk about Libra, but we don't know what Facebook what Facebook infrastructure is doing. So they are also working on different platforms, but they are not making sure that these platforms are ready for the market. So they're working on the current technology, and then they are actually analyzing the stuff that how they can scale better. Okay, Amazon is not holding back either. They have different products in their services. So what Amazon started, how actually Amazon has started. Amazon has studied the user behavior, and they have put it at different options on their platform, so that once they have the customer don't have to go anywhere else. So they have different products like Amazon Impact or Amazon Go. So with this one platform, one customer, if they have their own platform, they don't have to go to any other fintech players or any bank for their services. And they're around $5 billion that they're generating, and it's using its own data to issue smarter loans from millions of merchants trending its marketplace. Okay, so what Ant Financial has done differently? I want you to focus on this slide, because this is very, very important thing you need to know, because if we know these strategies, that how they're doing with this infrastructure. So in the first step, once they initiated this thing, they started with an escrow payment. Like they were only want to, issue the escrow payments for the users. So they started with this. And then when they realized that they want to save the data, so within 2-3 years time, they use Oracle and Microsoft for scaling, that they use some other infrastructure for scale. And when they realized that, in the third step, that once their subscriber base is scaling, or they reach to a certain level, then they use their own cloud service to, handle such growing transactions. So in the fourth step, they have introduced AI for better fraud and risk management. So imagine if you are having a massive database and you are generating a lot of sales with cheaper and at good rates, and you're delivering, and also you're having AI for fraud management. So what sort of platform it could be, So you can imagine the technology behind it. And then there are 2 billion users make 1 billion projects. So in the 5 step, what they have, so this whole is taking place within a period of 10 to 12 years. From step 1, from starting an escrow to delivering the 2 billion users transactions in service with fraud and AI detection. So imagine that how much, or once they have achieved this, they have been able to have a valuation of $150 billion US. Okay, and with also each employee with Ant Financial, each employee makes a $16 million per year, as compared to Barclays, which is having around $1 million per year, what employee makes, and with respect to Stripe, it's like around $5 to $6 million per year. Okay, but with respect to Ant Financial, and these figures are like in 2017 and 2018. So now imagine once we are landing towards 2020 and future, so imagine how they can reach, or what massive scale that they can reach up to. So imagine that if let's say, for this, imagine that for every 3 years, they have to throw away their legacy system. So can bank throw away their legacy system? I don't think so. Okay, so the challenge, what I feel is that in the US and in the Europe especially, they have a legacy system that is preventing them to scale. And why? Because they have worked like 100 years to reach to that level. So they don't want to change that easily. But with respect to the technology companies, they are starting like in the millennium age, and they know that if you want to have better services, you have to change your system every 2-3 years. You need to have constant upgrades of your system. So that's where the beauty lies, is that once you know the concept, you know that what my users are doing, or how or what services I need to scale. Like if I'm having an e-commerce platform, I can also, with my user strength, I can also go into some different industries. Okay, so they have a constant upgrades, and their leadership also includes all of the technical guys. So imagine in the bank, normally we have executives so we have a lot of bureaucracy in the bank. So that is what preventing them to scale or to upgrade their systems. Okay, so this gentleman, you're aware of this, Jack Ma and Jeff Bezos. So this is what I would say is that if you want to start with tech and add the fin, and let the child lead the parent to the future, because this is where the future lies. Well, thank you so much.
Thank you, Taha.